Hello, and welcome to the third episode of the JeaFx Trading Thoughts podcast. In this episode, we're going to talk about ego, which is something that affects a lot of traders for a long time. I'm going to talk about the downfalls of having a strong ego in trading and how you can actually remove your ego from your work. So, first of all, what is ego and how does it actually play a role in trading? Now, an ego is generally the desire to be right. You want to be seen as right, you want to be seen as a genius to other people, and you want to feel right and feel smart yourself. An ego is all good to a degree, and it will help you in various parts of life, but trading is not one of those parts. A lot of issues can actually come up if you have a strong ego when you're trading, because you'll put too much focus on being right and being smart and not enough focus on the basic core of what we're doing here, which is trying to make money. Ego brings up a lot of problems. There are three key problems that drive in via ego, which we're going to talk about in today's video. Having a big ego in trading can cause a lot of problems. There are three problems that I'm going to talk about in today's podcast, which are the three key reasons why you need to control your ego and try as hard as you can to remove your ego from your trading work. So the first problem that a big ego will bring is stubbornness. This is arguably the most detrimental part of ego in trading. Because if you have a big ego and you feel like you have to be right and you have to be smart and you have to be the best trader in the world, you're going to be stubborn about trades and strategies. Now, let's say you are in a position and it's starting to lose, but you do not believe that it's going to continue in the direction it's headed. You believe strongly that you are right about this trade. It's going to turn around and it's going to move in your given direction. If you stay stubborn and you let your ego and your desire to be right overtake the desire to make money and control risk, you can easily lose large portions of your capital by holding on to a losing, hopeless position. So stubbornness is going to kill your accounts and put you out of the game if you don't get that ego into control and you don't cut out that desire to be correct. You need to put the desire to make money and the desire to trade well over the desire to be right and to be smart on every single trade that you take. Real traders, true traders, and successful traders are willing to lose and they are ready to take losses and accept that they are wrong on a position, whether that is just to close out a loss or maybe even to flip biases. If you are super stubborn and your ego is too strong to let go of a position, you're first of all going to dig yourselves holes with losses, but you're also not going to have the skill that it takes to actually flip your bias and turn a buy trade into a sell trade if the market tells you that's what to do. With a big ego in trading, it's easy to get stuck on one idea and marry a bias and keep trying to trade the market in one direction, even if it's giving you all the signs that you should be trading it the other way. Now, the second problem that comes around due to a big ego in trading is unrealistic strategies. This is a very common problem nowadays, as I notice when I'm on social media. Obviously, I have quite a large social media presence, meaning I engage with a lot of people over there. And it surprises me to see and upsets me to see how many people are trying to trade unrealistic strategies thanks to these social media gurus who are sharing 1 to 20, 1 to 30, 1 to 40 yard trades all of the time. Thanks to our ego, it's easy to get caught up trying to be the best trader in the world and trying to show off how good you are. This leads you to trading unrealistic strategies because rather than just trading realistically and trading a system that works for you, whether that's trading 1 to 2, 1 to 3, 1 to 4, or 1 to 5 odd trades, everyone nowadays is reaching for 2 pip stop losses and 20 odd trades every single time so that they can show off that they are the greatest trader. The problem I have with this is, sure, some people may achieve this, but 99% of these Instagram gurus who are showing massive trades every single day are lying. They don't hit these trades. They just mark them up after the fact and send out the analysis to look like geniuses. They have a massive ego problem and they want to sell you something. And in turn, this is leading people to develop massive problems with their ego, where nowadays it's like a battle to be the greatest trader in the world, who can take the biggest risk reward trade, who can make the most profit on a single move. At the end of the day, none of this matters. All you need to do is make money. And some people, sure, may be naturals and may be able to hit these big risk reward targets, but 99.9% of people are not built like that. Most people would do better trading a low risk reward and higher win rate strategy where they're reaching for example, 1 to 3R, 1 to 4R. Maybe you could even push it towards 1 to 6 and 1 to 7 quite regularly. But generally, all you need to do is build something that makes money. And we have different personality types, right? Some people can trade 1 to 2 and win. Others will even trade 1 to 1 and find a winning strategy that way. Now, for me, 1 to 1 does not work. 1 to 2 doesn't really work for my trading style and my psychology style, but I like to go for anything between 1 to 3 and 1 to 7. Sometimes I'll stretch trades up to 1 to 10, and sure, I have had a trade which was 1 to 42, and I've had another one which was 1 to 46, but these are massive outliers. Over 2 years, I've taken 2 trades over 40R. It's not an everyday thing. It's not an every week thing. It's just one of those when the opportunity comes around to hold a trade longer than you initially expected to. So don't be focusing on unrealistic strategies. Don't be focusing on 2 pip stop losses, 3 pip stop losses, and don't be focusing on trying to reach for 10, 20, 30, or 40R on every trade you take. Instead, adopt a realistic strategy that works for you, whether that is low risk reward and doesn't show off how great of a trader you are. That does not matter. If that is what's winning for you, then you are a great trader. You're a better trader than the person on Instagram who's faking 40R positions every single week. Now, the third big problem that a big ego will bring to trading is unrealistic targets. This one is very much entwined with the previous point that we just spoke about, but unrealistic targets come around for the same reason. You want to be the person who makes 1,000% in the year. You want to be the person who just did 100% month. This is unrealistic and totally unsustainable, but your ego can get in the way and you might get addicted to that feeling where you want to be the best trader in the world. You may feel like you have a point to prove to your parents, your family, your friends, or people who have doubted you in the past. This is a bad ground to build a career from, but even if you are doing that, the best way to focus and prove yourself to these people, if that is really your undying goal, is to just be successful doing what works for you. You're never going to impress anyone in your life losing all your money by trying to reach too high. If you approach the markets with a strategy that works and you make money and you build your dreams of having a full-time trading career, even if you are trading one-to-ones, you are doing better than 95% of people in this industry. So ground yourself in realism. And I must say from the last point, I really don't recommend using your ego as a driving factor in your trading career. But even if you were doing that, the best way to actually utilize that ego is to simply accept that you don't need to be taking huge trades. You don't need to be making huge profits every single month. The best way to prove yourself as a good trader and to be a good trader is to just trade a simple system that works for you. So those are the 3 big problems that ego brings around. We have stubbornness, which is going to kill your trading accounts. We have unrealistic strategies, which is going to hinder your time and put you behind by taking up all of your hours and taking up all of your days and weeks and months, trying to trade a ridiculous over-the-top strategy. And the third problem leading from that is unrealistic targets. Instead of aiming for realistic moves and realistic monthly and yearly gains, you're going for crazy gains which are totally unsustainable and will lead in you losing all of your money. So now that you understand the problems that ego brings, how do you actually remove your ego from trading to become a better trader? The first tip that I have for you is to put side by side your real results versus your backtesting results. Now, if you're not backtesting, definitely get into that. But if you are, which you definitely should be, all you need to do to see the effect of your ego is put side by side your real account results versus your backtesting results. Most likely, your backtesting results are going to be positive, and they'll be grounded in logic and system following. Your real results, however, are affected by emotion in the real time and affected by your ego. So you may see your real results are much worse than your backtesting results because you've hung on to trades or you've tried to reach too far and you've got greedy out of that drive from the ego. If you have successful backtesting results and unsuccessful real results, you're immediately going to see the detriment that ego has in your trading. Now, obviously, there will be other factors like fear, but most of the greed aspect and the bad management is actually going to be driven by ego, whether consciously or subconsciously. So leading on from that point, I would also look to journal all your trades and see where your ego is killing your results. If you have every trade journal, you can go back and look over those and you can see, okay, this trade started out well. I found this systematically, but then I ruined the trade by holding on too long out of greed and ignoring reversal signals. Or perhaps you moved your stop loss because you were so confident the trade was going to continue. Even worse, maybe you've even over-risked by adding new lots to a position that either was moving in your favor or wasn't. And all of these things are going to come clear when you start to look over your journal. So if you're not journaling already and you don't have any backtesting data, this is very bad, but there's no time like the present to start. So get some backtesting done, get some journaling done, and then after a month or so, review your current journal trades versus your backtesting and try and break down the journal trades and see where ego came in to cause problems for you. Now, another point and a very, very big one is just to do what works for you. Don't try to do what is working for social media gurus. The people achieving 1 to 30 and 1 to 40R on every trade most likely are not doing that anyway. So if you chase them and you chase that as the dream, you're probably not ever going to get there because it's essentially entirely unrealistic to consistently do that. People have different personality types, and something I often talk about with my members in my group and on private calls is that they need to trade in a way that fits their personality style. Some traders are built to go for high risk reward. Some traders have the nerve to do that. Many don't. Some people will trade better trying to go for 1 to 2R with a 70% win rate than they would trying to go to 1 to 10 with a 20% win rate, and vice versa. Everyone is different, everyone makes money in different ways, but the amount of times I've driven my students from trying to go for these crazy risk reward gains and instead bringing them back to reality and explaining to them that their personality type works better for smaller trades like 1 to 2, 1 to 3, and then they've started to build success by trading a 1 to 2 and 1 to 3 strategy has happened a lot. So it's definitely worth trying to analyze your personal risk tolerance, your patience, your psychology, how well you can handle your emotions, and then trying to derive your strategy from that. You don't have to learn a whole new strategy, but you can adapt the concepts you know to either go for the high risk reward and low win rate approaches if that suits you, or to go with the low risk reward and higher win rate strategies if that is what suits you the best. So essentially forget what social media gurus are doing. Even myself, if you have to, I honestly don't go for this crazy risk reward and I don't advocate for it. And most of my trades will average around 1 to 5 or 1 to 6, which is pretty good. But you don't even need to try and achieve the results I'm achieving in terms of risk reward. You can simply go for exactly what works for you. And if you think you can outdo me on the risk reward front without being too ego driven and with logic and backtesting results to back you up, then sure thing, go for it. I'm not one to hold you back and say that you can't trade high risk reward. I'm just saying you need to consider, are you aiming for high risk reward because of your ego? Or are you aiming for high risk reward because you can actually achieve that with results to back it up? And the final point about removing ego from trading is going to be stop strategy hopping, because if you are strategy hopping where you are jumping from system to system every time you find a new mentor, on YouTube or on Instagram or something, if you're diving from approach to approach, you're never going to stick to one. Now, ego plays a part in this because if you are trading a strategy for a month or so and it's not working out, you might feel like you should be winning and you have to be winning right now. So you may then move on to another strategy, find the same problem there, and keep moving on thinking that these are just not right. These don't work. It's nothing to do with you. It's just that the system does not work. Now, a lot of the times, if you can't get the system to work, in all honesty, it's because you are not as good as you think you are. So what you need to do there is ground your ego, slow down, really analyze the system and really develop usage of a system, backtest the system and work through those ups and downs and work through the early days where the system is going to confuse you somewhat. If you can do all of these things and you can develop your skills on a system without abandoning it to move on to the next big thing, then you are going to find much more success than the person who is jumping from system to system every single week, hoping to hit the jackpot with a system that immediately works for them. This is rarely, if ever, the case. So it's better to just find one system, remove your ego, go through the losses, go through the slow periods, and slowly develop your skills to a winning point. So those are my points for removing ego from your trading. We've spoken about the big issues that come around from ego, those being stubbornness, unrealistic strategies, and unrealistic targets. And then I just showed you how to remove your ego from trading. You want to look at your real results side by side to your backtesting results and see where the ego is coming in and affecting your trades. You want to journal every setup that you take and look back over those setups to see which ones ego interfered with and caused you to kill your results. You want to make sure you're doing what works for you and your personality style. You don't need to be chasing these crazy risk reward trades, and you don't need to be chasing massive monthly profits. You need to trade a grounded, realistic strategy and stop caring about what other people think of you as a trader. If you can make money, you're doing better than most. You don't have to take crazy risk reward. You don't have to be making millions a month to be the best trader in the world. All you need to do is become successful in your strategy. And last but not least, don't strategy hop. This is killing time, and generally it's not going to be a point of the strategy not being good, but it's probably that you are not good enough to actually apply it successfully. So stop strategy hopping, remove your ego, go through the harder times with that system, and eventually you will get it to work. Those are my key points to remove ego from your trading. Hopefully you can do that now, and hopefully this has given you some benefit to become a better trader overall. I hope you've enjoyed this episode of the Trading Thoughts podcast by JeaFx. If you want to learn more and become a better trader, head over to JeaFx.com and join my trading academy. I also have social platforms. If you go to instagram.com/JeaFx_, that is going to take you to my Instagram page. From my bio there, you'll find all of my social media platforms, and you'll also find access to my free trading course. So to become a better trader, make sure you follow that advice. Thank you for listening to this episode of the podcast, and I will see you in the next one next week.